Hello, it's Jordan, and this video is being recorded on the late evening of September 15th, 2016. This is your precious metals market update. Thank you for joining me. And taking a look at the gold stocks here, we have the daily line chart, GDX at the top, GDXJ at the bottom. And the last time we did a video update, I believe, was 3 or 4 weeks ago, and we were looking for the miners to break out and run into this thin zone. At the same time, we were looking for gold to possibly break above 1400 because it has a thin zone from 1400 to the low 1500s, and you could also include 1375 as the resistance there instead of 1400. And what we saw happen with the miners is they got into the thin zone, but buying really dried up, and they eventually fell back and have begun the biggest correction of this bull market. And let's look at where we are with respect to these long-term charts. And one thing that we'll notice in the upcoming, well, 2 slides from now is that GDXJ is showing more strength than GDX. And GDX closed, I believe, around 25 today. One level to focus on as a realistic worst-case scenario is 22 because there's a confluence of major support there. You have the 50% retracement of the entire rebound. You have the 200-day moving average. You have the 400-day exponential moving average, and I'm going to get into why that's important on the next slide. And in addition, as you can see, the 22 range for area for GDX, that's been an important pivot point since 2013. I mean, it's been support or resistance together a handful of times dating back 3+ years. So it's a very important level, and it possibly could mark the low of this correction. I'm not predicting that it's going to be 22, but bulls should mentally prepare for that as far as a realistic worst case. Now, before we get into a more short-term look at the miners, we'll just go to the next slide, and this shows a daily line chart of GDM, which is, of course, the parent or the forerunner index to GDX. And, I mean, they're almost carbon copies of each other. And we can see with GDM that we can see the false breakout there, and it's come back. And we can see the 400-day exponential moving average. Look at the blue arrows there. During the bull years, that marked very important lows during the bull years. I mean, in 2001, 2002, 2003, I'm not sure if it was 2003 or at the end of 2002. I can't tell right now. But anyway, it also happened 2006 and then 2009 and 2010, even in 2011, kind of the last move up before the major peak there. So this 400-day exponential moving average, I mean, we always talk about the 400-day moving average itself, which is extremely important. But with respect to gold stocks going back over the last 16, 17 years, it's clear that the 400-day exponential moving average during the bull years is very important support, and that comes into play at 22, and we've already seen that for GDX. And, I mean, you can see the confluence of support there for GDM. And just the final comment, we can see the oscillators were, of course, several months ago were extremely overbought, and now they're not overbought anymore. If the miners go down just a little bit more from here, they're going to be very oversold on a 50-day moving average basis. But I mean, it's probably going to be a long time before we see them getting oversold on like a 200-day or a 400-day moving average basis. I mean, in my opinion, it could be a couple years before that happens. But anyway, let's drill down onto the short term. And again, in this chart, what we have here is GDX at the top and GDXJ at the top and GDX at the bottom. And what we're showing here is the hourly bar chart, and the moving average is the equivalent of the 50-day moving average. And what we can see is that if you look at the arrows, the 50-day moving average was support. Now it's been resistance since the market put in a peak. And if you look at the yellow circle, That's bearish consolidation. I mean, there's just no way that's bullish. I mean, maybe it'll trade lower and make a huge reversal at some point sooner than I expect. But it's just clear bearish consolidation there right now. And looking at GDXJ, which closed around 45, its support targets are at 41 and then 39, and then you get to the top of the June gap around 36. But GDXJ is showing a lot more strength than GDX. I mean, it could fall uh, 10% from here and perhaps double bottom at 41 or even go down to 39, which would be, I don't know, 12, 13%. I mean, miners they've corrected a decent amount here already. So another 12 or 13%, that would be significant for GDXJ, but still, I mean, this would be a very bullish looking chart. So I'm not phased by the weakness in miners with respect to GDXJ. I mean, it has strong underlying support, but I obviously I can't predict the future. I can't tell you where the low may or may not be. But I would be really surprised if it doesn't test at least 41. And 39 looks to be stronger support than 41. So keep those targets in mind. And with respect to GDX, um, again, as I read this, my chart is so small that I can't tell where it closed today, but I'm guessing it looks like it's around 26 actually. I think I said 25 a minute ago. But GDX has key support in the high 24s. I mean, just below 25. That's kind of the first key area of support. And then what's interesting is there's a very thin zone from about 23 all the way to the high 24s. I mean, it looks like there's a gap, then there's only one bar. So a gap in one bar between 23 to nearly 25. So if GDX breaks below the high 24s, it could end up falling down to 23 quickly, and then maybe it bottoms around 22, like we talked about before. I mean, the one thing we want to watch is if we do see more selling here and more losses in these miners. Look how they act around these support targets. I mean, we as bulls we want to see like a bullish hammer around the support targets. I mean, a bullish hammer on a daily chart would be great. I mean, in other words, the market it goes down to the support target, or it trades down several percent down to the support target, but then it makes a strong reversal, and then it leaves a bullish hammer on the chart. Now, if we see that on the daily chart, that's great. If we see a bullish hammer on the weekly chart, then we know that an important low is definitely in place. But as far as the very short term here, um, I do think we're going to see lower prices before we see higher prices. And I also think that's going to be the case with gold, which I believe closed somewhere around 1315 today. It should have good support around 1300 to 1310, but I do think it's going to test the 1280s at some point, and 1250 and 1260 is very strong support. That's a level that absolutely has to hold. But back to the miners again, at the risk of repeating myself way too many times, I see a little bit more downside here before we begin another leg higher. Another way to look at this, if you look at some Canadian indices, I mean, I have my own junior index, and along with some Canadian indices, that peaked at the very beginning of July. So, though, I mean, what that tells you is we're basically 2.5 months into a correction slash consolidation, depending on what you're looking at. And I mean, perhaps this period could last 2, 3, 4 more months. But that being said, the best buy opportunity, who knows? It might come in the next couple weeks, might even come in the next couple days around the time of the Fed. And the Fed action or what they say could really impact this one way or another. I would really prefer to see weakness into the Fed, because if we kind of go sideways into the Fed and maybe we rally after the Fed, the market could still be set up for another move lower. I would like to see the miners be weak into the Fed and test support around that time, because you get a lot of weakness into the Fed, then it's susceptible to see a nice sustained rally after that. Anyway, on that note, that's all I have for today. You can follow more on my work at thedailygold.com. You can opt in there for my free newsletter. You can also learn more about my premium newsletter, which costs less than $1 a day. Thank you so much, everyone, for listening and watching. And I hope to speak with you all again soon with another video update in the next week or two.